Okay, accounts payable, the PR is 201.
Yes, 201. Good. All right. Now, are we going to be, how are we going to fill in these numbers? Should we go to the worksheet and fill it out, or do you want to figure it out and then recalculate it again on the worksheet?
Well, I already plugged in the numbers, and I just went along with what it says.
Okay.
Um, 500 times the unit cost, which is 265, and I got a debit amount of 1325 for the purchase expense.
All right. So the great thing about this is you're actually allowed to enter in formulas. So what I did is I typed in the formula completely and it calculated for me with no issues. Now let me go ahead and format it so then it gives me the right amount of cents. Okay, how much was freight?
100.
100 for freight. And what is the total amount I owe?
1425.
1425. Perfect. All right. And then for the description, I'm going to write who's my vendor? Who did I buy this from?
Cuppies Company.
Yes. Hold on. I lost my Cuppies Company. Right? Did they give us any terms or anything?
Yes.
Okay. What is it?
5%, 15, net 30.
Okay. Good. All right. There's my description. I guess it didn't take my italicized. There you go. All right. Good. So where do we need to go now?
The next, well, we got to go to our worksheet.
Yes, we need to fill in our worksheet. So here we have what day? May 1st. How many items did we buy?
500.
Okay, at $2.65. Here, pretty simple. You're going to take this cell and you're going to take this cell and multiply them together. And then freight expense was $100. So how do you find the total cost?
Oh, you add the purchase
Yes,
price and the freight expense and get
exactly.
1425.
All right, and what method are we using?
LIFO,
LIFO. So we need to calculate the cost per item, which is what?
$2.85.
Okay, so we're going to take our total cost and we're going to divide that by our total quantity, which is 500, and we get $2.85. Good. All right. Any questions on that? All right. Okay. All right, what happened next?
We returned 15 broken mugs for a full refund.
All right, there you go. We returned 15 mugs. Why? They were broken. Okay. So what do we do? What do we need to do here? What is the transaction at hand?
Returns and allowances.
Returns and allowances, but which one? We have two of them, right? Let's look at a chart of accounts. We have two of them. Which one are we going to be using?
Purchase return allowance.
Purchase returns and allowances. Good. Now, what is purchase returns and allowances? Are we going to debit that, or are we going to credit that?
Debit it.
Why debit?
Wait a minute, 5, 5, 6.
Because we're giving it back.
We're okay, but what? Okay, yes, David, it is an expense, but what is purchase returns and allowance? What kind of account is it?
NASA.
Not an asset. We already established it's an expense. Is it a main account? Is it a sub account? Is it a contra account?
Oh, it's a contract now.
It's a contra account. Yes. So if purchase returns and allowances is a contra account to purchases, how would you journalize it? What is the normal balance of a purchase returns and allowances? If purchases is a debit balance and purchase returns is a contra account,
It's a credit balance.
it's a credit balance. That's correct, right? Okay, so we established that it's a credit balance. But what are we returning? What are we supposed to be getting back?
We're returning mugs.
Yes. Okay, so we're returning mugs. But how did we pay? How did we pay the vendor?
Accounts payable.
Accounts
Okay.
payable. So they have to give us back our money, right?
Mm-hmm.
So because we have it on accounts payable, how are they going to give that us back?
Accounts receivable.
Not accounts receivable. We don't they don't owe us money. We owe them money.
Um, Checking.
Not
Well, it's on
checking.
account, so
Well, wouldn't we? Oh, wait a minute.
What did you say? Go ahead.
No, I'm trying to figure that. Wouldn't, since we, that was a purchase expense.
What is up with my cap lock?
No, that's not this. Then wouldn't that be a credit back to? It would be a credit back to purchase expense.
This is exactly why we create a contra account. You can't reverse a purchase expense.
Oh, okay, right, that's right, yeah, okay.
All right. So if we are returning money to us, but we didn't even pay them yet,
Mm-hmm.
so what are they giving back to us?
About 15 full refund.
Yes, but what are they? How are they giving it back to us? Is the question.
Cash.
Not cash. We didn't pay them yet.
No, accounts payable.
Accounts payable. We have to reduce the amount we owe them, right?
Oh, right.
Right.
They're giving us a credit back.
Mm-hmm.
Okay, good. Accounts payable. All right. And how do we decrease an accounts payable?
A debit balance.
With a debit. Yes, good. All right. Okay, what is the account for purchase returns? 556. Okay, so, all right, now that we established the accounts, what is the amount that we're going to get returned? How many items are we asking to get a refund for?
15.
15.
mugs.
Okay. How much did we originally buy it for?
Oh, 15 times 2,
We bought
65.
it for 265, so 39.75.
Yes, $39.75. Okay, so $39.75. Yes, perfect. Okay. This does not include the freight that we charged, right? Because you cannot get you if you're returning to
Yeah,
a
I
vendor,
think it-
you cannot get it. You cannot return money on a freight. All right, so now the next thing is we need to update our inventory worksheet. Is that right? Okay, so where in the worksheet do we place this information?
Discounts and allowances.
Yes, right here in returns, allowances, and discounts. Yes. So how many items did we return?
15.
15. And how much did it cost us per item?
$2.65.
Yes, and here we multiply it again, and it's $39.75. All right. All right. So that was a little tricky one. I'm going to go ahead and put my description in and said return 15 mugs. Okay. All right. What's the next thing that happened?
Have sold 20 mugs.
Return.
We sold 10 mugs.
$9.99 each.
Wait, hold on. I heard Jabrea said, what did you do?
We sold 10 mugs that same day for $9.99.
Good, good. So refund 15. Okay, so all right. So the same day, you can either journalize the same day. Most people don't because usually if it's the same day, usually the transaction will list it. But for good practices, go ahead and put the date in there. Just in case like you leave off work or something and you lose your place, at least you know you were left off on that day. So, all right. So I'm on May 5th. My bad. Let me fix that. So May 5th. All right. We sold 10 mugs at $9.99 each, right? All right. So, and it says right here, we sold it for cash.
Oh, I thought it was on the count. Okay, wait a minute.
No. Let's
no.
read it again. You sold
Yeah, you're
10
right.
mugs at $9.99 each for cash.
Okay.
All right.
Yes.
Cash.
So we recognize cash because that's what we're receiving. We're receiving cash. Good. Cash. All right. What else do we need to recognize?
102.
Sales and sales tax payable.
Sales and sales tax payable. That is right. All right. So let's see what account sales is. Sales
401.
is 401. Good. And what is our sales tax payable? 230. Good. Now, let's calculate how much sales is because we wouldn't know how much total cash we would have. So, what is sales? What do we know?
Well, it's $99.90. It's the 10 mugs at $9.99.
Yes. So, 10 mugs times 9.99, you're going to get 99.90. All right? How do we calculate sales tax?
We multiply, $99.90 by the sales
Mm-hmm.
and by the tax rate of 8.25%.
And we get $8.24. Good.
Yep.
So what is the total amount of cash we're gonna receive?
Add
108.14.
108.14. Yes, 108.14. All right, good. Question to you. We just made a sales. Do we need to update our inventory worksheet?
Yes.
Why?
Because we received cash. We made a cash sale.
So what does that have to do with our inventory worksheet?
We have
Well,
left inventory.
We have less tan mugs.
All right, but what kind of tracking method are we on? Periodic. And when do we calculate all the sales and stuff?
Oh, at the end of the period.
At the end of the period. So do we need to update the inventory? No. We will not know how many items we sell until someone goes down to the basement to find out how many items you have left in inventory. So no. So no matter what kind of sale you make, you will never know how many cups you have.
Right.
Okay. All right. And I'm just going to say description is going to be sold to customers. I don't know. All right. This parenthesis thing, man. It bothers me as much as it doesn't bother anyone else, but all right. Okay, good. So, what is the next thing that happened? Actually, let's go ahead. So, are we done? Are we done for May 5th?
Yes.
Yes. Okay, so what's next?
May 8th, 20 mugs, purchase 20 mugs at $2.75.
Wait,
at
David,
$39.50.
David, you skipped one.
May 6th, you sold 20 mugs.
Yes, May
For
6th.
$9.99 each.
All right, let's keep reading. Is there a specific person that we sold this to?
No.
Yes.
Customer A.
Yes.
Oh, I'm sorry.
All right, and what's the specific word? What does it say? How did he pay?
On account.
On account, so accounts receivable.
Good. So, account customer A, instead of receiving cash, what are we receiving?
Receivable.
Good. What are we? Oh, we also what else are we going to be recognizing?
Okay, well, there are terms.
Okay. But what
Oh, okay, further that would be sales
Uh-huh.
and sales tax payable.
Yes. So I'm just going to go ahead and copy this down here. Okay. Okay, so accounts what account what is it 103? Yes, 103 is accounts receivable. All right. So 103 is accounts receivable. Okay. So how do we calculate how much customer A owes us?
Okay, well, sales is $199.80.
All right, how did you get that?
20 mugs times a unit cost of $9.99.
Good.
Then we multiply 199, $199.80 by the tax rate of 8.25%.
Good.
It's 8.25%, and I get $16.48.
Good. So, how much does he owe us?
Okay, so we add the tax plus the sales, and you'll get the accounts receivable, which is $216.28.
Yes, $216.28. All right, good. And then let me just go ahead and put this in the middle. All right, so good. So what is our description?
Company on
That
account.
that's our vendor. That's our vendor. Who did we sell to?
Sold to customer A with terms of 10%, 10, 30.
Good. With terms 10%, 10 net 30. Good. Right? They owe us money. Okay. Good. All right. Do we need to update our inventory worksheet?
Yes.
10 and that.
Why? David, why?
You gotta keep track of everything.
But what tracking method are we using?
LIFO.
That's costing method.
Oh.
Periodic.
Periodic.
Okay, so David, I'm gonna ask you, when do we recognize our sales? Like, how do we know how much we sold?
At the end.
Right? Are we at the end of the period yet?
No.
No. So do we recognize anything that we sold?
No.
No. Okay. All right. So no, we do not need to update our inventory worksheet because we don't record any of what we sold. All right. Okay, good. So, are we done with May 6th?
Yes.
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 All right. So, what comes next?
May 8th.
May 8th. Okay.
Purchase 20 mugs at $2.75 with a freight of $50 on account.
Okay.
With terms 5% net 15 at 30.
Okay. All right. So, what does our accounts look like?
That's a purchase expense.
Purchase expense. Oh, I don't even know where my mouse is. There you go. Purchase
And
expense.
freight expense.
You okay there, Mr. Sanchez?
Yeah, I'm fine.
Good.
Cut my throat.
So we recognize purchase expense and freight expense. I'm going to go ahead and go up in my journal and just copy the account numbers here. So I recognize 551 and 511. And then what was the keyword? How are we paying them?
It's accounts payable.
Account pay- Yeah.
Good. Accounts payable. So we're going to recognize accounts payable. All right. So how much do we owe how much was purchases?
$687.50.
All right. How did you get that?
Let me see, 250 mugs, at $2.75.
Good. And we get $687.50.
Exactly.
Good. Good. How much was freight?
Freight was $50.
$50. So our grand total that we owe is how much?
737.50.
$737.50. Good. Sorry, all my decimals are off. I don't know why. I guess I need to format this whole page. So excuse me if my numbers are just coming off really funky. And for some reason it's not letting me reformat it. So that's also a bummer.
Lynn,
Yes.
highlight the D and E.
What is D and
Highlight the
E?
whole column. The columns.
Huh?
Column D,
Highlight
column
the,
E. Yeah, and the E. And go to the comma up there go to your numbers. And highlight comma and change it. Highlight comma.
Okay, there you go. The comma?
Change to accounting, yeah.
Oh no, this is accounting.
No, those numbers before. You want accounting.
Oh, but then that's gonna have.
What?
If you do comma style.
It's gonna be accounting. Accounting format.
Oh, okay. Okay, for me, accounting format is the dollar sign. It even says accounting style. Okay.
That's the same thing as the comma. That's okay. That's okay.
I got you. All right. So let's go ahead and solve for the rest. But it made everything unformatted. It's not in the middle. Okay. Anyways, so now we're gonna write it here. So now we owe Cuppies more money.
yes.
All right. Make sure you recognize Cuppies. Cuppies Co. What was the terms? 5%.
5%.
All right. 15. Net 30.
15, net 30.
All right. So we need to make sure every time we do this, we kind of need to recognize, well, when are they going? When is it that I need to pay to meet the discount period? But because we're starting our new business, I mean, when we move on to doing Coffee Cafe, you're going to have what's called a subsidiary ledger. And that's where you're going to write down all the information and when you need to make the discount period and when is it the whole thing actually due. So in this case, we are not going to learn in depth what the subsidiary ledger is, just because right now I just want you to keep practicing how to journalize, how to use the chart of accounts, and how to get the numbers and make sure that they match. So I just want you to keep focusing on that, okay? All right. So what is next?
10 May, you sold 30 mugs.
Wait,
No, we're
David,
not-
you're jumping ahead too much.
Oh,
All right. So again, are we still on May?
Yes.
yes.
Yes, we are. What happened now?
We're
We got 50 mugs because they were the wrong color, and Puppy Co. offered a 15% discount.
And what did you do?
Except,
We accepted it. So we end up keeping the black mugs because they accidentally overshipped us too much, and they ending up shipping us a set of black mugs when we wanted brown mugs. So they're like, well, you know what? They're still the same thing. You could still sell those mugs or use them for your shop. They're just a different color. So how about I offer you a 50% discount? Now, we can say you either accept it or you can decline it. You could be like, no, I want a full refund. So, but we're like, you know what? Okay, you're right. We can probably resell it to someone else. Maybe we'll have a special sale. So we said, okay, I'll accept that 15% discount. So, again, how are we going to look at this?
Accounts payable,
Okay, that's yes, okay. Accounts payable, okay. We are going to lower our account, good.
purchase expense,
Not purchase expense, David. Remember, you can't, we can't, no.
No, it's purchase, returns, and allowance.
Yes, good. Okay, so why aren't we using a purchase discount? Anybody?
I didn't hear the question.
Why aren't we using purchase discount? Yes.
Because we're returning.
Well, we didn't return it. They denied us and said, "Hey, we'll give you a 50% discount." And we said, "You know what? Okay, I'll accept it."
So they're not returning the item, they're just getting
We're still selling
additional
them.
discount.
Yes. Yes, good, good, good. And
It's
what
gonna
I
be purchase discount.
No, I'm asking you, why are we not using purchase discounts? What the heck? What happened to and
That's a
allowances?
good question.
All right.
Wouldn't that be a purchase, discount? It should be under purchase discount, shouldn't it?
No,
No.
No,
No,
it's
we're
an
not
allowance.
discounting what we're selling.
the reason why
Uh-huh,
you're not returning, you're not getting a discount. They're giving you an allowance. If you keep it, we're going to discount
Oh.
just those items, not the
Okay.
whole, not the whole price. Just those items. We're going to give you
right.
an allowance. It's going to
An
increase your.
allowance. Yeah.
Yes, it's an allowance account. Yes,
Allowance,
and
not a-
because
Not a discount.
no, exactly. Because they didn't originally offer this discount. This is us trying to return it, but they're saying, how about we give you a discount on top of that? So you still end up purchasing the items, but they're giving you an allowance.
An allowance.
Yes.
That makes a difference.
Yes, it does. It does. It does.
Mhm.
Okay, so let me see what account number that is. It is 556. Okay. And what numbers are we going to be using? How are we going to calculate these 50 mugs?
So 50 mugs at $2.75 each is $137.50.
Okay,
We're
so
getting 15% discount, so we multiply that amount by 15%. And you should get $20.63.
$20.63 is correct. Yes. Okay, so explain.
What was that formula? Could you repeat that again? How
So
you
she
calculated that?
okay. So she said we were trying to return 50 items, right? And if it costs us $2.75, right? In parentheses, I'm calculating 50 items for $2.75. And what's
Okay.
going to happen is I'm going to multiply that by 0.15, which is the percentage, and you're going to get $20.63.
Okay,
Yes.
I see.
So, yes, so good. Okay, and then I'm going to make note right here that 15% discount on 50 mugs. Okay? Now, because we have a purchase returns and allowances, does that affect our inventory worksheet?
No.
Why no?
Lynn,
Yes?
go to your inventory worksheet for me. Yeah, down there on the lower right. I'm sorry. Yeah, that's so you need to recognize that allowance there on the lower right.
Yes,
Well, the
purchase
question was,
allowances.
the question was, do we need to? Lee said no, and I would have said why.
Okay, I'm sorry.
We
I'm
do
jumping in
need
where
to, yeah, we
I'm
do
jumping in
need
where I
to,
shouldn't. Go ahead.
So,
Get out
again,
loud.
all right. So the answer
both
is yes, we do need to recognize it, but where do we recognize it?
under the returns, allowances, and discounts.
Yes, and why? Because everything that we're dealing with, if you look at the very top of this worksheet, it says right here, purchases. It says purchases right here, purchase expense. So everything that you're dealing with in this worksheet is anything that you purchase from a vendor. So if you are making a sales,
Right.
is sales connected to your vendor? No, sales is your customers.
Right, right,
Anything that you purchase involves with your vendor, correct?
right.
So this worksheet, just for I guess a guideline of how to get to answer these questions is think about it. Inventory is only affected by every purchase that you make. So anything that's dealing with the vendor, yes, you need to update this worksheet. Anything that deals with the customer, you don't record sales until or recognize any items that you sold until the very end of the period. So we don't care about sales at all when we're dealing periodic inventory. Okay, so now that we have a purchase returns and allowances, what do we need to recognize? Did we return any items?
No,
No.
but we did get a
No,
discount.
no.
No, we
No.
didn't, but we did get a
Just an-
discount. How much was the discount for?
15%.
15% on 50 of them,
So what's the total amount?
$20.63.
Yes, we're gonna recognize. We're gonna return 0 items. However, we got money back for 20. We got a discount, so they're giving us money back of $20.63. Okay, good. All right, and here we recognize that we got a 15% discount off of those 50 mugs. All right. So, any questions so far, like of journalizing? Again, this is good
Did
setup.
you record that with it?
Say that again. What did you say, David? David, does something happen? Okay. So, yes, so again, this is going to be the meat and core of the entire class time. We're going to be journalizing left and right, and we're going to be recognizing what entries you need to make, and also yes. So this is pretty much it. Okay. All right. So let's go ahead and continue. So is there any other questions besides this? So we finished May 8th. All right. Any questions on purchase returns and allowances? You guys did good because you guys didn't include the freight. You included just the original purchase price, which is correct. Because you cannot return freight. They might even require you to pay money to ship those items back. So, good. All right. Okay. So, what happened on May 10?
So 30 mugs,
Okay. You sold 30 mugs. For what?
Cash.
For cash. So, what are we going to recognize?
cash.
Yes, because we gained money, right? We increased our cash. All right. What else are we going to recognize?
Sales.
I'm sorry, cash.
Sales.
And then sales tax payable.
Okay. Sales tax payable. All right. I'm gonna go up here. So what is the accounts for cash? It's 101. What account is
101.
sales?
Sales is 401.
Sales is 401. And what is tax?
Sales tax is 230. Oh, no,
Per
No, that's right.
That's
230.
right, 230.
Oh, right,
Yeah,
okay.
but the cash, shouldn't that be 102?
Yes, I'm sorry, 102. My bad. All right. So, how do we solve for sales?
Make it, 30 times 999.
So, let me see. Sales is going to be 30 times 9.99.
It's $299.70.
Good.
Okay, multiply that by the tax of 8.25%.
Good.
That's 24.73.
Good.
Then we add that to the sales amount,
Yes, we add these two numbers together.
and you'll get $324.43.
Yes, good job. All right. And then this one, we just sold to random customers. So I'm just going to say sold to customers. It did not say specifically who we sold it to. So we're just going to say we just sold it to random customers.
Sold to customers.
Okay. All right. What happened next?
We sold 60 mugs at $9.99 each
Okay.
on account.
Yes. Who did we sell it to?
Customer B.
Customer B. And we gave them terms, right?
Yep, 10%, 10, net 30.
Okay. So let's go ahead and look at this. So what are we going to recognize? So
Accounts
6.
receivable.
6.
Accounts receivable, right?
Yes, because they owe us money.
Right. Sales,
We're going to recognize sales.
sales tax payable,
And we're going to recognize sales tax payable.
okay, so the sales amount should be $599.40. That's 60 mugs at $9.99 each.
60 mugs at $9.99 each gives you $599.40. And how much was the sales tax?
$49.45.
$49.45. So what is our total amount that this customer B owes us?
$648.85.
Okay, so let's go ahead and recognize the accounts. What is accounts receivable?
103.
103. What is sales?
401.
And what is sales tax?
230.
230. Yes. Okay. Good. And here we need to make sure we write in our description. Hold up. I totally forgot. Did we just make a purchase?
No, we sold these.
No, it's a sales.
Yeah, we sold the mugs.
All right, but hold up. Let's
$9.99.
see. Did we enter in our purchase? No, we didn't enter in our second purchase. We recognized the return here, but we forgot to put in this. We were so focused on journalizing, so let's go ahead and put the information back in here.
Back over there.
Yeah.
About this, the inventory page.
So was it the 5th of May or the 8th of May? I think it was the 8th of May.
The A.
All right, and we bought 250 items. It was for 275. So we need to multiply those two together. Freight was 50. So we got we got a grand total of $737.50. Now, how do we solve for the cost per item?
Total cost.
We divide the total cost and the quantity.
Yes, and we get $2.95. Okay, sorry about that. I was like, there's something wrong. I think we forgot to do something. All right, so then now I'm gonna go back here and I'm going to say we sold this to who?
The customer B with a terms of 10% and at 30.
10%, 15, or 10? 10 at 30. Perfect. Okay. So we reached the end of our first we reached the end of our first journal, so that's one full page that we completed. So right now we need to finish up. We're gonna leave off of the middle of May. So I am going right now. It is 2:35. So I'm gonna call break real quick. So 35. Be back in 20 minutes. So 55. So please be back before 3. I will do roll call. So and then we'll continue from there.
Okay.
All right. Okay.
Okay. Did you say
Yes.
255 or 3?
2:55, give or take, because there's
Yes.
sometimes 3 o'clock will be the max.
Okay.
All right.
Okay. Thank you.
If you guys have any questions about this, if you need to ask me, stick around. If not, we'll continue.
Lynn? Lynn, can you hear me?
Okay, baby, you want to go outside? Here.
She's
Go.
muted already, so I think she's gone.
Yeah, I see that now. Oh, okay, I'll talk to her later.
Okay.
It's done.
You gonna come inside with me? Yo? Okay. All right, everybody, roll call. Who's here?
I am
I'm
here.
here.
All right, we got Portia, Jabrea, David.
Yep, I'm here.
We got Lee. Whoa, is that a tattoo? What do you have of?
You have a tattoo. USMC.
Oh, cool, nice.
Thank you.
All right, so we're waiting for Andrea and Mr. Sanchez if he chooses to be.
Oh, yes, I'm here. I thought I took my thing off mute.
Okay,
Sorry.
no worries. So,
I'm
you
here.
know, okay, so you know what I found out? So if this is by accident as well. I actually tapped something on my keyboard, and what happens is it starts automatically muting Google for you. I don't know what button I pressed, but I end up pressing something on my keyboard, and it shut me off from the Google Hangout. So that could have been something that you've done, Andrea. You might have
Oh,
tapped something
maybe.
on the keyboard, and it just locked you out.
Oh, maybe that's what happened, because that was I'm scared now to come out to do anything else. When I tried to make some copies of what you were going over, I got knocked out.
Yeah, so it could be most likely your key, any button that you press on your keyboard. I don't know which one it is. I'm too scared to attempt it.
Well, you know what? Now I have the mouse. I have a mouse that I'm using. Now that could have, maybe something was wrong with the mouse.
That could be true too.
Yeah.
I don't know, but I just discovered that yesterday because I
Right.
don't know. I just hit my keyboard and it suddenly mute me and
Yeah,
took me
that
out
is
of the
so
screen.
weird.
Yeah, it was really weird.
Mhm.
Yeah, just sharing my experience with you. So,
Thank you.
all
Wasn't feeling good.
right. So here, welcome back. And here, oh man. All right, let's go ahead and continue exactly where we left off. So we said we left off on the 15th of May. Is that correct?
Was it the 12th of May?
We finished the 12th of May, but we left off
Oh,
on
you
the
did.
15th of
Okay.
May. So,
Oh, right. Okay.
yeah. So, with that, let's go ahead and determine what is the next journal entry. Okay, so what happened on May 15th?
Customer B returned 30 mugs for full refund.
Customer B, oh, he returns 30 mugs. Why? For a full refund.
Yeah.
Well, all right, so how do we record that?
Okay. 5 mugs, 5.99.
Okay, so let's look at the transaction at hand. Okay, all right, but look at the situation. Who is returning? Are we returning or is the customer returning?
The customers.
Customer's returning.
Okay, so if we're dealing with customers, what are we dealing primarily with? We're dealing with sales, right?
Return.
Oh, yeah, right. So,
Yep.
Okay, good. Sales, returns, and allowances. Good. So is that a debit or a credit?
Credit.
Why? What is sales, returns, and allowances? What kind of account is sales, returns, and allowances?
Didn't we say that was a contra?
It's a contra.
Yes, it's a contra. Okay. So if we recognize that sales normally has a credit balance, then what is sales, returns, and allowances?
Debit balance.
It's going to be a debit balance. Yes. So we're going to recognize sales. sales, returns, and allowances. I'm just going to write allow for short. All right. What else do we need to recognize?
Accounts
Oh,
Accounts what?
payable.
Not payable. We don't owe
No,
anybody.
receivable.
Receivable. They owe us. That's correct. Okay. They paid us via they owe us, right? So we need to recognize that they need to give us back. We need to deduct the amount that they owe. All right. What else do we also need to recognize?
Wouldn't it be sales tax?
Sales tax. Thank you. Good job. Yes. We need to recognize that because there's a portion of that money that isn't ours. And that is sales tax.
Payable.
Yeah, sales tax payable. All right, so let's look at our chart of accounts. What is sales returns and allowances? What number is that?
oh, that's 556.
Five
Oh,
fifty.
I'm
No, no,
sorry,
no. That's purchase.
406.
406.
406. Good. What is our sales tax payable?
230.
230. And what is our accounts receivable?
103.
103. Yes, that's correct. Now let's go ahead and calculate. So we are giving him a full refund. Okay. So how much did the cups cost and how much are we returning back to him?
Okay. Mugs at $9.99 each.
Okay, so 30 at $9.99 each. Okay.
Yeah, so 299.70.
Yes. How much tax do we have to return?
8.25%.
Mm-hmm.
Let's see.
So 24.73.
24.73. So how much do we need to reduce his account? Account B. Assuming he's a male.
Right.
$324.43.
Yes.
Yes, 324.43. Okay. All right, I'm going to indicate that in my description that we gave him refund. Oh, wait, we got to write customer B.
Customer B.
30 mugs refund. Okay, cool. All right. Do we need to edit our inventory worksheet?
No.
No. Why?
Because we're at the end of the month. Or at the end of the cycle.
Yes, I hear Jabrea saying that it's because it's a sales. Yes. It has nothing to do with our vendor. It has nothing to do with our purchases. These are completely separate. All right. Good. What happened next?
Oh, we have to record it under returns and allowances?
David, we just went over
Yes.
this. For sales returns and allowances, where are we recording this?
Sales.
Okay. And then because you said you just asked me, don't we record it? Where are you recording this?
Under sales returns and allowances.
Yes, we've done that right here.
Okay.
Okay. If you're talking about the inventory worksheet, remember, this is purchase returns and allowances. Right? We're not dealing with our vendors. We're dealing with just our customers. Our customers have nothing to do with this worksheet at all.
Okay.
Okay, so we don't need to record it here. All right. So what happened next?
Okay, we made another sale for cash.
Okay. On the same date?
18 May.
No. 15 May.
The same day, 15.
Same day. And what did we receive?
Receive.
What did we receive?
Cash.
Cash.
Oh, I
Yes.
see.
Yes, we got money. This is for sales, for cash. Okay. All right.
Account 102 account.
102. Good. What else do we need to recognize?
Sales and sales tax payable.
Oh no, I just got rid of my cash account. Cash. All right. Sales and sales tax payable. That is correct. Okay. I believe sales is 401 and sales tax is 230. All right. So, how much was the sales for? How many items did we sell?
$249.75.
Okay, so May 15, you sold 25 items at $9.99. So yes, 24975. And how much is tax?
$20.60.
Good. And then what's the total here?
$270.35.
Okay. So, as you can see, we're getting used to journalizing and we're getting used to understanding what every transaction is. This is very typical, especially if you're dealing this in real life and you're the bookkeeper. You're going to have to do this every single day. Same accounts, same things that you're going to be dealing with. This is you doing this every single day. So, yes, you may think it's tedious, but that's what you signed up for.
That's true.
I am sorry to say, but this is what you signed up for. All right. So, yes, this part will get boring, but that is exactly what you're here to do. That's what you came to class for. So here we sold to random customers. We don't know who. Okay. All right. Right. And obviously, you wouldn't be doing all of this in one sitting. You would do this every single day. Okay. All right. What happened next?
It was a purchase.
Oh, is it a purchase?
Yeah.
Yes,
purchase.
purchase 400
Oh,
mugs.
yeah, 400 mugs at $2.80.
Okay, what date are we on?
We're on,
No,
I jumped out. I'm sorry, I jumped out. Yeah, no, that's 20. Yeah, May 20.
May 18th. Should be on the 18th.
We should be on the 18th.
Oh, we're still on the 18th. Oh, okay. this
Yeah,
is
no,
the
we
18th.
just finished the 15. We just finished the 15.
Oh,
Okay.
so we haven't done 18 yet. Okay.
No, yeah, we haven't done 18
Well,
yet. All
I put
right.
May 18th on that last one.
So let's go ahead. So May 18. All right. What happened here? Now, this is a different scenario. What happened here?
Customer A paid in full with cash.
All right. Okay.
Customer A back on May 6th.
So May 6th, customer A. Okay, good.
They missed the discount.
We missed the discount period.
So they
So,
had to pay in full.
mm-hmm.
Pay in full. Gosh, I got paper everywhere. Where's my May 6th? Okay, so the amount of receivable was 216.28, and that's the amount.
So what was
they
it?
got to pay.
216.58 you said?
28.
Okay, so we know that much. Okay, we recognize that they paid on the 18th. They missed the pay period by, I think like 5 days or something, 4 days. So, all right, so that means they don't get the discount. Okay, so they have to pay in full. Now, let's look at the accounts. What are we receiving from the vendor? I mean, what are we receiving from the customer?
Cash.
We're receiving cash. So therefore, we're increasing our assets.
Right.
Okay? All right. Now, because they don't owe us anymore, what account are we going to reduce?
Accounts receivable.
Accounts receivable, because they no longer owe us anymore.
Right.
That's correct. So we're going to recognize that we're going to credit our accounts receivable. Okay. What happened to my cap lock, man? Accounts receivable. Good. All right. What are those accounts? So we got 102 and 103. All right. And we're going to say, what's our description?
Customer
A.
paid.
Mm-hmm.
Full amount.
Mm-hmm.
Paid
Paid.
in full.
Yep. Paid in full. Okay. Good. All right. Does this affect our inventory worksheet?
Not right now.
No, it has nothing to do with anything. No sales, no purchases. It's just them doing their duties and paying us back. Cool. We got money. That's a good sign. All right. All right. So what happened next?
Okay, we sold 50 mugs for cash.
All right. Same day?
Yes.
So 15 of May. We sold.
Should be 18 of May, right?
Oh, yeah, you're right. I'm sorry.
Yeah.
My bad. My bad. I apologize.
Okay.
I
I'm
was.
easily confused at this point. So I gotta-
I've been thinking, I think it was because Andrea was stuck on the
everywhere.
15, yes. Okay, so May 15, May 18. All right, May 18. So what do we need to recognize?
So
Cash.
50 bucks for cash,
We received cash, good,
sales, and sales tax.
good.
Yep.
Sales and the sales tax. Oopsies, I misspelled. Sales tax. Payable. Okay, so those accounts should be 102, 401, and 230. All right. So this time, how many items did we sell?
50 mugs,
50.
50 mugs at $9.
9.99 each.
Okay. So I got $499.50.
Yep.
All right. What do we need to?
The tax amount is 41.21.
Tax. Okay, good.
Okay, add those two together and we'll get the cash amount of $540.71.
540.71. All right, good. And then my description is sold to
50
customers.
mugs to a random customer.
You can write whatever you want as long as it's in parentheses. Okay. All right. What else happened?
Okay, that's it on May 18th.
Mm-hmm.
Okay, so May 20th,
May 20th.
we purchased, okay, so that's a purchase expense.
We purchased good.
And we have, purchase expense on account.
Oh my God, what is wrong with my caps lock? I keep pressing it and it's not locking in. All right, purchase expense.
Okay,
All right.
freight expense,
We need to recognize freight expense. And then what else?
um,
Accounts payable.
accounts
Yeah,
payable,
accounts
since
payable.
it's on account.
Yes, that's correct. Accounts payable. We owe this person money. So therefore, we're not paying them now, we're paying them later. And I'm going to go ahead and write my description right now. So, who is it? I bought it from Cuppies. Oopsie, Cuppies Co. And my terms are 5%, 15, net 30. Okay? All right. So again, my accounts numbers are, I think this is
Purchase
201,
551. Yeah.
551, and purchase freight expenses 501.
511.
Oh, 511. Thank
Yeah,
you.
sure.
Okay. So, how do we know how much we bought? So, what is our purchase price?
400 mugs at 280 each.
280. Okay. So, how much is that going to give us? Oopsies, I'm on the wrong side.
1,120.
So equals 400 times 280.
Yes.
All right. So I got $1,120.
Yes.
All right.
Okay. All right. How much was freight expense?
$80,
$80. So what's the total amount that we owe?
1,200.
1,200. All right. Does this affect inventory?
Yes.
Yes. So what do we got to do?
On 520
So here, 520.
for 400 for quantity at $2.80 unit price.
Mm-hmm.
So that's purchase price is $11.20. Freight expense 80. Total cost 1,200. Cost per item $3.
$3. There you go.
Okay.
$3. Good. All right.
On May 20th, we sold 30 mugs for cash.
Hold up. Let's see. Are we completely done with May 20th?
No,
Okay. Let me see if I have enough space. Okay, good. So May 20th. What did we do?
we sold
Sold
30
300
mud,
For what?
30 cash.
Cash. So I'm just going to go ahead and copy this. So we sold for cash. We need to recognize sales and sales tax. So 30 mugs at $9.99. What else? What is freight? I mean, what is sales tax?
Okay, 370 times 3.25% is $24.73.
Yes. So our total amount that we are going to receive in cash is
324.43.
perfect. Good. All right. All right, we're almost done. We got a couple more days left, so let's go ahead and sit tight. What happened next?
We get the description in for that one, don't we?
I have it. It's sold to customers.
I
Random
didn't get that
customer.
far.
Say that, David. What did you say?
Yeah, I didn't get that far yet.
Oh, okay. All right.
To May. Okay.
So the 22nd of May, what happened?
Customer
Paid full
paid in
cash.
full.
Yes. Is there a specific, did it say with cash? Okay.
Okay, so back on May 12th,
So
customer
May
B
12th.
has an accounts receivable. Let's see, terms 10 days from, so that's 27. It's right on the day.
Perfect. So what does that mean?
Do they get it or don't they? It's right on the day.
They say within 10 days. If he made it on the 10th day, what does that mean?
So they qualify, huh?
They qualify. So how are we going to recognize this time?
Okay, well, let's see. That would be a contra.
Yes. What kind of account? Look at your chart of accounts if you need help.
Okay, accounts receivable. No.
Yes, that will be for the bottom one.
Okay, so
Isn't that
purchase returns and allowance, or sales returns and allowance.
Okay, so let's understand this. Okay, so what are the two reasons we can use the account? Okay, so are we giving him a rate? Are we giving him an allowance?
Yes.
Why?
So we're giving him a discount.
We're giving
on
him
the
a
whole-
discount, but is he
Oh,
attempting to return something?
No.
No, he's not.
No, he's not. Okay. So what account are you going to use?
Okay, so accounts receivable.
Is sales discount. Thank you. I think Jabrea said it earlier.
Yep.
Okay, sales discount. Yes, you're going to recognize a sales discount. But what are you receiving? Most importantly, what are you receiving from this customer?
cash? We're receiving cash.
Yes, you need to recognize the debit first. We received cash. We recognize that there's a sales discount. Good. All right. Now, because he owes us money and because he's paying it off, we need to reduce that.
Receivable.
So we need to
Yeah.
reduce accounts receivable. Yes. We need to credit accounts receivable. right. And let me see, I think cash is 102. Accounts receivable is 103. And what is sales discount? That's a new one. 405. Okay, so how do we determine how much he owes us now? How much are we receiving from him? And how much is the discount?
In full,
Okay, well, we can't
15 months.
include the tax, so 599.40 times 10% is a discount.
Okay, but let's look at this a question again. So what did customer B do?
we paid in full cash.
He paid in full in cash, but did he come to us before he paid?
Yeah,
No,
Okay, let's go back. Let's go back a few scenarios.
yeah. Wasn't he there on the 15th? I mean, on the 12th?
What did he do on the 12th?
We sold him 60 mugs at $9.99.
Okay.
Customer B on account, terms 10 net.
All
And then
right.
customer B returned the 30 mugs for full refund.
Yes. So does he owe us for the full 60 mugs?
No,
No, he only owes
No,
us
he only
for
got it for the 30
30
mugs,
of
so
them,
we only
right.
have to do it for 30 mugs.
exactly.
Mugs.
oh, that's right, on May 15th.
Yes, May
Already
15. He
bought
returned, and we decreased the value by by let me see
by half.
by half.
30.
Okay, so if we decrease the amount by half, let's go ahead and recognize this again. So if he originally owed us on the 12th of May, the 12th of May, let me find it real quick. Accounts receivable. So he originally owed us $648.85. Okay, that included the sales and that included the sales tax. Okay, on May 15th, he decided to come back and reduce his amount because he wanted a refund. He didn't want those 30 mugs anymore. So we decreased the accounts receivable by exactly what you said, by half. However, let's look at this calculation real quick. If he originally owed us $648.85. Okay, so I'm gonna make that right here. So what was it? 648 85? Is that
Yes.
right? 648 wait, where am I? 64835. 64885. Okay, so 64885. That's his original. How much of the accounts receivable did we decrease it by?
By half.
Okay,
50%.
by half, right? But look,
yes.
we have 43 cents. So therefore, we owe, oops, sorry, hold on. I don't know what went right there. So we have $648.85, and we're going to decrease it by $324.43. So therefore, we have an odd amount of pennies right here. Do you not see that? So therefore,
Yes.
we recognize that he owes us a total of $324.42. So this is how much his accounts receivable is going to decrease by. 3, 4, 2, and is it 24? 24 cents. 42 cents. Okay. All right. Now, we just learned that you can't take a discount off of the tax. So we need to make a calculation here. How many mugs does he still have?
30.
He still has 30. How much did we sell it for?
9.99.
Mm-hmm. And how much is the discount for?
10%.
10%. So if I calculate this, we should get his discount is $29.97.
Right.
All right. And then from there, that does not include the tax. So we're going to end up paying whatever tax he owes us. Or, I mean, he's going to pay us the tax that he owes us. So what is our total amount of cash we will be receiving?
312.45.
Let me see, 312.45. And that is correct. 312.45. Okay.
Shouldn't the accounts receivable be 324.42?
What did you say? 324 or 342? Oh, yeah, good. 324.42. My bad. 324.42.
32442.
Mm-hmm.
Okay, then the cash is different.
Yes, sorry about that.
32442 minus 29.97.
Mm-hmm.
So 294.45.
Yes. Okay. And then I'm going to write here, customer B paid.
In full.
Customer B paid in full. Good. All right. Any questions on why do we choose discounts and then instead of sales returns and allowance?
Because he didn't return anything.
He didn't attempt to return anything. Correct. Okay. This is us because we gave him because he was a customer of ours. We said, if you can pay within this, I will give you a discount. Okay. All right. So this is us giving him a discount, not us giving him a discount because he wants to return something. We're not giving him an allowance. We're giving him a full-on discount, and it's right here. All right. Any questions on the discount?
I do have one question. You're posting this, is that correct?
Yes.
Okay, because I just realized I left off that sale that he made on, the 12th. I'm searching all over my sheet for it and I couldn't find it and I realized, oh, I didn't put it on there. So, okay, that's good. As long as I know that it's gonna be there, I can go back and redo that.
Okay. All right. All right. Any questions about the discount and how we did the sales discount? All right, then. Let's see. Is that the end of what day are we on?
No, we got one more. 22 May. For 15 mugs sold for cash, $9.99.
Okay, cool. All right. And what did we sell it for? Cash?
Cash.
All right, so I'm going to take a shortcut. I'm going to go ahead and copy the top one up here. Okay, so what are we recognizing?
Cash, sales, and sales tax.
Exactly. We need to recognize that we received cash. We need to recognize that we had a sale. And we need to also recognize that there is sales tax for that. Okay, so how many cups did we sell?
15.
At how much?
$9.99 each.
So that's going to give us how much?
$149.85.
$149.85. And how much was sales tax?
$12.36.
$12.36. So how much cash in total did we receive from these random customers?
$162.21.
162.21 is correct though. All right. So I'm going to leave it here for a couple minutes. All right. All right. All right.
25 May, yeah, we have a sale, Memorial Day sale. 30% off all mugs.
So the 25th.
Yes,
All right. So we had a Memorial Day sale.
yes.
So what happened here?
Sales discount,
Sales. Okay, good. You recognize sales discount. What did we receive?
Cash.
We received cash. Yes. Number 1. Okay. And yes, we received a sales discount. Okay, good. What else do we also recognize?
Sales discount.
um,
What did we
account receivable,
not account receivable? We're not dealing with, who are we dealing with? Just random customers, right? We sold a total of 175 mugs to random people for cash.
Right.
yes.
All right. So
Sales.
yes, we need to recognize sales. That's right. Okay.
And then
Now,
sales. Oh, go ahead.
okay, go ahead. And sales tax
Sales
payable.
tax rate, yeah, payable.
All right. Now, tell me, why are we using the sales discount?
Because, we had discount, Memorial Day discount. 30% off.
Yes. We have an in-store wide sales, as in whatever that we're calculating, it's for anybody and everybody. Okay? So, all right, cool. Good. So let's go ahead and look at the numbers. What is cash?
102.
What is sales discount?
405,
405. What is sales?
401. Sales tax is 230.
Okay, yeah, 401. That's right. Good. All right. So, how are we going to determine this number? Where are we going to start first?
We have to start with sales.
Good. All right. So, in total, how many cups did we sell?
175.
Okay. And how much are we going to be charging them?
30% less than that.
Okay, but remember, when we're calculating sales, if we have a contra account, what does sales have to be always recorded at?
Are we still? I'm still wondering if we're still using the 9.99. Because if that's the case, I'm not sure.
Right. You said $9.99?
Yes.
That is correct. Why? We entered this yesterday. Sales is always, no matter what, it's never going to change. If you establish that these cups are $9.99, you're going to forever continue as if today was a normal day. As in, you didn't have that sale. So again, because today is Memorial Day, I decided to throw up a sign and said, hey, guess what? You can come and get a sales discount. But that doesn't mean tomorrow everything's going to be regular price. So I'm still going to charge at the same amount of price for $9.99. So far I have this, all right? Now, how do I determine the discount off of that, the sales?
Well, we multiply
Mm-hmm.
1748.25 by 30%.
Exactly. We need to solve for the total amount of sales in order to solve for the discount. So by taking the 1748.25 and we're multiplying it by the 30%, that is where we're going to say, okay, $524 is going to be discounted off of the sales that we currently made. All right?
Okay.
All right. So how do we determine the sales tax?
How do we get to what? I'm sorry.
How do we get the sales tax?
Wouldn't we do the sales tax off of the 524.48?
Mm,
No,
That's what we're
no.
selling it
this,
for?
You take the sales and subtract the sales discount and then multiply it by the 18.25.
Yes, that is correct. You're going to take your original price, you're going to minus the sales discount, right? And
Right.
then you're going to multiply that entire total by the 0.825. So you're taking the tax, you're going to multiply it on the discounted amount.
Okay, so the tax is on the discounted amount.
Yes, it's going to be after the discount.
Mm-hmm.
Okay. So in this case I got $100.96. All right. Did everyone get that?
Yes.
Yeah.
All right. So now this is going to be simple math right here. How much cash are we going to receive? Okay. How do we solve for this?
Sales minus the sales tax.
Not minus, David.
Plus.
Yes, so we're going to determine this right here, this column right here. What is our total debits? What's the number one rule when journalizing?
They got to equal.
They have to
They have
equal.
to equal,
Yes.
yeah.
So if our total credit is going to give us a total of $1,849.
We take the 1849 minus the 524.
That's correct. And what are you gonna get?
1324.73.
Let's see. 1324.74. I got 74. Is that right? Let me see. I'm gonna add these real quick. Because if they're off, then okay, I got 21 and 21 on both sides. 5 plus 6 is 11. 4 plus 8 is 12. Okay, so yes, I did find a discrepancy there. So one of these numbers is rounded. So I think this number is not rounded. So it is 1324.74, 73.
73.
Yeah. Okay, so 3 plus 8 is 11. Okay. All right. See, sometimes Excel will also trick you into ways of seeing things that you don't really see. All right. So this is the 5%. This is the 5% accounting errors. Is relying yourself on the machine to do the work for you. But 95% of all accounting errors are human, okay? You can type something in wrong, right? So good. So here we have a total of 1324.73. Okay.
Okay.
All right. Let me see. We have 2 more things left. Is that correct? Okay, it's up to you guys. I'm gonna give you guys an option. Right now it is 3:45. Um, we could take a break till 4 o'clock and try to finish this up, or we can push through. And if we push through, then I'll let you guys go out early at 4:30. So if we don't take a break now, I let you out 15 minutes early.
Sounds good to me.
Okay?
We can push through.
Push through. Anybody else? Because I want to go for the
Yeah.
weekend too.
Push through.
Yeah,
Yeah, we can push through.
Push through.
Okay. All right. Okay, so we're going to push through. Okay, let's actually
I
finish
figure
this
it's how
off.
we're already in the mindset.
Say that again.
I figure it's how we're already in the mindset.
Good, good, good. But some people kind of get tired after this. So I just want to make sure if everyone agrees, then we will push through. All right. So what do I need to recognize here?
28 May. Customer C.
Hold up.
well, we still have one more.
Hold up. Let me finish this description real quick. 30% in store discount.
Oh, yeah.
Okay. And I spelled discount wrong.
COUNT.
Yep. Okay. Got it. Okay. So let's see where we left off. Okay. So let me see. We finished on the 25th of May. So what else do we need to? So we sold a total of 175 mugs for cash. Okay. We already just completed that one. So what's the next scenario?
28 May.
20
28th.
of May. All right. What happened there?
Customer C wants to buy all black mugs from you.
All right. Yay. So we end up selling those black mugs anyway.
You offered him a 10% discount. You pay by credit card.
Okay. So let's see if you guys can try to figure this one out.
Okay, so credit card.
Okay. Where does credit card actually go? Let's go ahead. Look at your chart of accounts and tell me.
That's what I was looking for. Wouldn't be a check. Accounts receivable.
Not accounts receivable. They don't owe us because if you pay with a credit card, that's automatically the money gets transferred to us.
So is that checking or is it cash?
Did they give us physical cash?
No.
No, they didn't give us a check either.
You don't need to specifically get a checking. Yes, thank you, Jabrea. It is linked to a checking account. So
So,
if someone is going to charge you a credit card charge, they automatically wired it straight into your checking account.
Oh, okay. That
So,
makes sense.
okay.
Yeah, that makes sense. I make an ATM withdrawal. It's checking. Okay. All right.
Making a withdrawal account is from your checking. That's correct.
Yeah.
So, we recognize that we received a checking. So, is that a debit or a credit?
that's
The
a
debit.
debit.
It is a debit, yes, because we are increasing our assets. Checking is another form of the bank, which is another form of cash.
Right.
All right, and that is for 101. Okay,
Okay.
so let's go back up to the scenario. Okay,
Then we got sales discount
sales discount, good.
because he has a 10% discount.
Yes, we physically gave him a discount because he purchased in bulk. Right? He got rid of the black cups. We didn't want the black cups. We wanted the brown ones. So we said, you know what? You're going to take all my black cups. I will give you a 10% discount. So yes, because we're physically giving him a discount on the items, he didn't attempt to return it. He didn't attempt to, he didn't attempt to return it. We're not giving him an allowance. We're giving him a discount. Good. What else do we need to recognize?
sales.
We need to recognize sales and what else?
And sales tax.
And of
Tax.
course, you can't.
There's always sales tax.
There will yeah, exactly. There will always be sales tax. Okay, you cannot escape from that. You can. There's ways around it, but in this scenario, you can't. All right.
Tax exempt.
Yes. What'd you say?
What if he's tax exempt?
What are examples of tax exempt?
Now, what if he's tax exempt? Then we don't do sales tax, right?
Well, if we are gonna play dirty and try to avoid to pay the state, you know, that's good. That's our risk.
Well, actually, that's a non-for-profit, because the company I worked for, we had, we were tax exempt.
Yeah, exactly. So nonprofits have special accounting. They don't follow the same guidelines.
Right.
And anybody that's cash basis, you can definitely get away with without paying sales tax. All right. Okay. So what are we recognizing? How many cups did he buy from us?
50.
About 50.
50, right? And how much are we going to charge him? Assuming the brown mugs and the black mugs are going to cost the same because they are the same cup, essentially, just different colors. We're going to charge,
65.
oopsies.
$499.75.
Hold on, sorry. I typed in the wrong number.
Are we charging the 265?
Why 265?
For the, isn't that what it was per mug?
I
That's
thought
how
it
much that's how much it cost us.
Yeah, exactly.
But we still want to make a profit off of it. We're not going to
Oh,
sell
no,
it
no,
at
no,
a
I mean
loss.
per mug. I mean per mug. I don't mean totally 265. I was trying to see what that would round out to, what they would actually pay.
We're trying to sell the product, not cost it. And we never want to sell at cost because then we make no profit. So we already spent money to buy these cups, and the vendor gave us a discount on it, but I still want to make money off of my cups.
Right.
Yes.
So I'm going to go ahead and I'm just going to assume that I'm going to charge the same amount for the black cups, or it's going to be the same amount as the brown cups because they're not different. They're just only different by color.
Right.
Okay, so 50 times $9.99,
Mhm.
the original price,
Mhm.
um, and then multiply that by 10% discount,
Mhm.
and you'll get $499.50.
40. Oh, I got 49.95. What did you get?
$49.95 would be the discount. Yeah.
Wait, hold on. Let me do that again. So multiply that by
Okay, so
10%.
$499.50 times 10% discount is $49.95.
Perfect. All right. And then okay. So that's how much we're giving him off. Is we're allowing him to give $50 off, roughly.
Okay.
Right.
So how much is sales tax?
Okay, you subtract the discounted amount,
$4.99.
$49.95 from the sales amount,
Okay.
and you multiply that by 8.25 sales tax rate,
Good.
you'll get $38.21.
As well.
I got $37.09. Let me.
Oh, okay, maybe I did it wrong.
Oh.
Okay, 199.5 minus 49.95. Oops, my thing keeps going. $49.95. It's 449.55
Okay.
times 8.25% is $37.09. 9 cents.
Yes.
Oh, okay.
Okay. All right.
3709.
All right. So again, same thing. How do we solve for how much we actually are going to be receiving in our bank?
Mom.
Well, okay, add 499.5 minus a discount 49.95. I got 486.64.
48, 486.64. Good. Good job. Okay. And then we're going to write here, right? Sold to our, we're actually good. Well, we didn't, well, no, I'm just going to write sold to customer B. Customer C. Black mugs.
I just put down sold black.
Okay. Sold to customer B, right? Or customer C. We didn't have an account with him, or he didn't create an account. We just made sure that we sold it to him because he can come back and be like, I don't want the black cups anymore. All right? At least we keep track of, because he's the one who specifically said, I'm here to pick up all of the things, and we gave customer C a specific discount. Okay? So it's good to keep note of that. All right?
Okay.
So finally, we are on the last section here. So on May 30th, what happened on May 30th?
Paid off all 3 bills. You owed, all in one check number 201.
Okay. Okay, so how many bills have we created?
I guess 3.
We have a total of 3 bills, and we decided to pay them all off. So let's go ahead and tackle one bill at a time. Okay, so what was the first bill for?
For $1,325.
For what?
Oh, wait a minute. The total cost with freight is $1,425. Actually, we have to. Oops. Shoot. There it is. I forgot to mute my phone. Okay.
No worries.
So we go to our inventory.
You can to check there, but what you have to be very careful because not only did we create a liability, we also had situations where we had to return certain ones.
All right.
Mm-hmm.
Okay.
So Bill
So,
1,
May 3rd,
okay, go ahead.
okay, we had. Okay, let's see, we're journalizing here. We're on the journal. Okay.
So I'm going to go ahead and put this on the side of the journal. Okay, I'm going to write bill number 1.
Okay.
We got bill
We owe-
number 2. And we got bill number 3. All right.
Okay, bill number 1 was for $1,425.
Okay.
Number 2 is $737.50.
Okay.
And bill number 3 was $1,200.
1200. Okay. Now, let's look carefully at bill number 1. Okay. So bill number 1,
Okay.
we made a purchase order. What are the terms?
5% net 30.
Okay. Did we make the discount period?
No.
No, we didn't. However, what happened the next day?
The next day.
Or I'm sorry, the on May 5th.
It returns.
Okay, we returned. Yeah.
We made a return. Okay. All right.
Okay,
And we
so
got it
that
for a
was
full credit. So how much did we return?
$39.75.
Okay, so we need to do
Subtract that.
14.25. By how much?
$39.75.
$39.75. Okay. So here we have bill number 1 is going to cost us $13.85.25.
Okay.
Okay. Now let's work on bill number 2. When did bill number 2 happen? Here on May 8th. We made a purchase of okay. So we have a total of $737.50. All right. Did we meet the discount period?
Within 15 days.
Okay, so what is 15 days plus 8?
So we missed it.
We missed it, so we don't get a discount off of that.
Okay.
All right, and then let's look here. What else did we do?
We returned.
Well, technically we did not return. We got a discount. All right. How much was that discount for?
$20.63.
Okay, so therefore we need to reduce this $737.50 by $20.63. So bill number 2 is $716.87. All right. So what happened for bill number 3? Okay. When did we make a purchase? On the 20th of May.
Mm-hmm.
Okay.
Yes.
Did we meet the terms?
Let's see, 15. Yes.
Yes, we did. How much is the discount?
5%.
5%. Okay. So we notice that we need to take 5% away from this 1200. Now, 1200 includes the freight. So how much was it originally?
Oh, okay.
11.20.
1120. Okay. Okay. And we're going to multiply that by the 5%. Okay. So we know that we need to take $56 off. So here we're going to recognize that it's going to be 1200 minus 56,
1144.
1144. Okay. Did we return anything to the vendor for bill number 3?
No.
I don't see anything returned.
No, we didn't make any sales returns or any I'm sorry. We didn't make any purchase returns or allowances for bill number 3. So what you're going to do is you're going to add the total of this. All right. And we get a total of $3,246.12. Now, what is our accounts going to be? What are we paying? How are we paying the vendor?
A check.
With a check, okay? All
What did
right.
you get there? 3.24. What? What's the cents?
12 cents.
Oh, 12 cents. Okay.
324, 12 cents.
324 6 and 12 cents. So 32.46 12 cents.
Okay.
All right, but what accounts am I going to be using?
Check.
Checking.
Checking is one of them. Okay. Is checking going to be debited or credited? Are we increasing our cash or are we decreasing our cash?
Decreasing.
Decreasing. So we're going to credit that account. Okay, so credits go last. So what are the accounts that are going to go before it?
Accounts payable?
Yes. Are we decreasing accounts payable or are we increasing it?
We're decreasing it.
We're decreasing it. So therefore, how do you decrease an accounts payable? Because we're not owing them anymore, right?
Right.
No.
So
Accounts payable.
okay, so 56. Okay.
So,
All right. So okay, so I kind of messed up over here because this is the total amount of this is our check amount, right?
Yes.
So
that would be the $3,246.12.
3,246.12. Yes, that's how much our check is going to be. Oopsies, wrong side. 3,246.12. Okay. Oh, wrong side. Dang it, man. What am I doing? I think I need a break. Okay. 3246.12 is our total cash that that the check that amount that we're going to write out. Okay. All right. What else do we need to recognize? We need to recognize that we also got a purchase discount. And purchase discount is what? What kind of account is purchase discount?
Shoot.
It's a contra account, and it's a contra account to purchases. So what is the normal balance of purchases?
Credit.
Credit.
No, a normal balance of purchases.
Oh, normal balance is it,
What is purchase?
Normally a debit.
Yes.
you're receiving something, yeah, so it's a debit.
Okay, no, it's an expense. So expenses normally have a
Oh,
debit
yes,
balance.
right,
Yes.
right, yeah.
So
Yes.
again, what is the
Debit.
account? What is the account number for purchase expense?
201.
201. Oh, let me see. Do we have enough time? All right. Yes, we have 20 minutes to try to get this done. All right. So because the purchase discounts was $56, right?
Wait, stop. We got accounts payable at 201 and purchase discount at 201. I can't be
Oh, sorry. What is purchase discount? It should be
555.
55555. Perfect. Okay. So that means the total amount that we are supposed to be owing is going to be this plus this, okay? When we are looking into our general ledger and we post from the journal to the ledger, you're going to automatically get you're automatically going to get the balance, the current balance. And again, when we look into subsidiary ledger is basically your way to keep track of all your bills. So you're going to have all of this information readily available to you. So when you check your subsidiary ledger and you check Cuppy's Co., you're going to see the exact amount you owe, including all your returns and allowances. They're going to be subtracted out. So you're automatically going to get the amount that you owe for the bill. This one, because we don't know, because we never kept track of it. So this is how I am teaching you to find out how much you actually owe. All right. Again, this is just for practice. Okay. So again, I am going to indicate payment to Cuppies Co. Check number, what did I say? 201. All right. Good. Now, we're at the end of our period, right?
Mm-hmm.
What does it say?
We have 700 left.
We have 700 units on hand. So what does that indicate?
It means we have 700 mugs left.
Exactly.
You're gonna put the 700 in the inventory on hand left in the quantity.
Yes. Yes. So that means it's time to solve for our ending inventory. All right. So here we have all the information here. What costing method are we using?
LIFO.
LIFO. So before we start anything, what do you need to do?
We need to add up the columns, the 4 columns.
Yes, we need to add up the 4 columns. So in this case, I'm going to take a shortcut because this is what you can do on Excel. You can equal sum this amount, and what you can do is you can take this little nifty tool handle, and you'll be able to apply that formula throughout the entire chart. So that's not cheating. This is exactly what we need to do in class, but unfortunately, we're not in class. We're in a virtual class. But I still want to be able to teach you Excel at the same time because it's most important that you understand Excel and not just do everything on paper. Okay? So, again, I use the equal sum. What you can do is if you are not familiar with equal sum, you can click and highlight, and at the bottom, you're going to see an auto sum here, and it's going to tell you the number right. It's going to tell you right here, this number right here. Oh, that's average, sorry. It's going to give you the sum right here. So you can do that and just type it in, and you could do it that way too. You can also highlight this, and at the top, you should see auto sum. Click that, and it will enter the amount here in this window. Okay? So,
and go plus.
or you can go equal plus every single one, but it's just easier to sum it. They have an auto sum. Okay, so here I recognize I have a total of, okay, this is not in dollars, so make sure you know that. We have 1,150 items available. Okay. You don't need to know this. This is not one of the things you need to fill, so we can get rid of that. Okay. Here we got a total of our purchases without freight is going to be $3,132.50. We recognize that our total freight is going to be $230, and our total is going to be $3,362.50. All right. Now that we solved for this, let's go ahead and fill out the rest of the chart. Okay. So how much quantity do we have?
We have 11,
1135.
50.
Mm-hmm. And how much did it cost us?
It cost us 33, 6,
That's including the freight, just the purchases.
oh, just the purchases, that was, 31, 32, 50.
290.
Yes, good.
But didn't we, Lynn, didn't we return 15?
Wait, this is just, we're just dealing with purchases. Now, what does the next section say? Yes. Now we can go over here to our returns and allowances. Let me go ahead and make this bigger so everyone can see. So now we can calculate how much do we have any sales? Do we have any returns and discounts? Yes, we do. Over here on this side of the table, I'm going to go ahead and sum this up. So we have a total of 15. We have a total of 15 cups we've returned. And we have a total of $60.38 that is being returned. Okay? So how do we plug this in? So how many items did we return?
15.
15.
Okay? And how much did all of that cost? $16.38. All right? And what's going to happen here is here it indicates that you need to subtract it. So,
Oh, I see. Okay.
yes.
That's where we make the adjustment. Yeah.
This is where we make the adjustment. Yes. All right. And here we recognize that we only have 11 and 35 items available. What else goes here? Okay. So our new total is 3072.12.
Mhm.
All right. How much was freight?
230.
230. And here it indicates we need to add it. So, what is 1135 plus 0?
1135.
Mm-hmm. And then what is 3072 plus the 230? Yes. Okay. Well, now we've done that section. Now the next section is we're going to fill in is this part right here. Okay. So now we got to recognize, did we have beginning balance? Did we have a beginning inventory?
No.
No. No, we didn't. All right. Here, our net purchases, we take it from the top. All right.
212.
All right. And it says here to find the goods available is going to be your beginning plus your net purchases. Okay. Since we have 0 on both sides. This is the total amount of goods available you have to sell. And this is how much it's going to cost you. Now let's go ahead and how much is at the end of the inventory? How many is at the end of on the 30th?
435 is the.
What does it say in the scenario? In the scenario it says you have how many?
Yes.
Oh, 700.
Yes. We have 700 left. So that means ending inventory is going to be 700. So how do you
Sold,
mm-hmm.
then would be the difference of 435.
Yes, so you guys solved for that already. Okay.
Mm-hmm.
So we're going to go ahead and try to solve for how much all that stuff cost us. So again, so we need to recognize that no matter what numbers we dip into, we need to end with 435. So let's go ahead and go look into the first batch. So what method are we using?
LIFO.
LIFO. So which batch are we going to dip in for first?
The May 20th, the full amount.
The full amount, yes. A total of 400 items. And for the full amount of that was how much?
1,200.
1,200. Okay. And then what else?
We have to take 35 more out of the previous purchase.
Good. For
35 times $2.95.
Mm-hmm. $2.95 is going to be this, multiply this,
So that's $103.25.
okay? And if we go ahead and sum these up, so we have a total of 430.
1303.25.
Oops, I didn't pull it far enough. There you go. Okay, so 133025. Yes. 130325. All right, and how do we find our cost of goods sold? I mean, how do we find our ending balance?
Okay, you subtract 1303.35 from 3302.12.
Yes.
At $1,998.77.
77.
Mm-hmm. That's what I got.
Okay, I got 87 cents.
Okay, I may have punched wrong.
Yeah, that's what I was.
Yeah, my,
You got the same as me, Jabrea?
Yes.
Okay, perfect.
Yes.
All right. Now, lastly, because we're at the end of the period and we found out how much we sold and how much ending inventory is, what we got to do? What is the last thing we got to do when we're dealing with periodic inventory? Conversion. Yes. So I'm going to go pull up my journal. Where,
Could you
okay.
just go back for just 1 second?
Yep.
Could you go back? Oh, no, you're right there, yeah. Okay, just 1 second, because I missed something.
Okay. Where are you lost, Andrea?
When you're putting the total cost, I think that's what I think I actually put it in the wrong spot at first. Okay.
The one above here?
Yeah, right, let me see where I'm looking on the line where I've got, the 1560, and then I've got 400, then the 1200, and right below that, oh, that's what I did, okay, the 103.25. And okay, 295 I got, the 37, okay, that's what I didn't get, okay, I'm good.
Okay. So now we got to journalize this, okay? All right. So, we're going to recognize May 30th. What accounts are we going to be putting in here? Okay. Use your chart of accounts to help you out. Oh no, I forgot. Okay, no, I got it. What accounts are we going to be using? We're going, yes, correct. Mugs and cost of goods sold. Mugs and cost, ooh, come on. And cost of goods sold. All right, so mugs is 150. Cost of goods sold is 501. All right. What else do we need to recognize? Purchase expense and freight expense. Oopsies.
Sales.
no sales. Just purchase expense and freight expense. Right?
Okay. What else do we need to recognize? There's one more account that we need to recognize. What did we utilize? What happened along the way that we kept encountering? What do you mean sales? Is not weird. This is not has nothing to do with sales. What do we need to counter in here? Purchase what?
Purchase discount. Fixed purchase return and allowances.
Yes, purchase returns and allowances. We need to zero that account out as well because it normally has a credit balance. We need to zero it out, and how we zero it out is debiting the yes. So you need a purchase returns and allowances. Good. So let me go ahead and get these numbers down. So purchase returns is 556. Oh, wait. Do we need to put in purchase discounts? Yes, we do. We do need to put purchase discounts. All right. My bad. You need to enter this another debit for purchase discounts. Right, or else your accounts will become uneven. I think we would have been able to find that pretty easily. So 551 for purchase expense, 555 for purchase discounts. And then freight expense was 511. All right. So, oopsies. Okay. So, in order to find all these answers and all these numbers, where are you going to be looking? Oh no, wait, we're supposed to put that in here. Oh my gosh, I think I did this wrong. I forgot to indicate the purchase discounts. We're supposed to indicate it here. $56 for the purchase discounts. Yeah, we were supposed to indicate the $56 in the purchase discounts. Okay, so the last one, I accidentally forgot to do the purchase discounts. So this inventory worksheet, I actually have to redo it.
Oh, okay.
Yeah, because I forgot to indicate the purchase discounts here. So 60 should be 116.38. Okay, so equals. All right. And that's going to shrink that down to this number. And then this number is going to shrink it down to this number. And then this number is going to shrink it down to this number. So these numbers are good. Just the cost is going to be different. All right. So our new number is now 3246.12 instead of what it was before. And
3246.12. Okay.
yeah, sorry about that, guys. I totally forgot about the purchase discounts that we just calculated in our journal right here. We have a purchase discounts. Okay, so the numbers are going to change a bit. I do apologize.
That's okay.
So, yes, so here the purchase discount's going to be for $56. The sales returns and allowances is going to be for, what was it, $60.38. And then your purchase expense is going to be for whatever you originally purchased it for. So the $313,250. Freight expense was $230. Is that right? Yeah, $230. Okay. And then now that our new mugs inventory has changed and our new cost of goods sold stays the same because we already calculated it. All right. So this stays the same. It's still going to be 1303.25. 1303.25. That's our cost of goods sold. 1303.25, and our ending is going to be 1942.87. 1942. Did I say 37? 87. 42. Okay. And I'm going to double check this just to make sure that my debits match my credits. All right. And I got 336,250 on both sides.
Exactly.
Okay, good. Yay. Minor setback there, but it was, yes. So sorry about that. Just forgot to indicate that purchase discounts. All right. All right. Any questions about this entire thing? Okay. So this is typically what you would see in a real life business. Okay. You're going to see, same again, rinse and repeat, rinse and repeat. You're going to journalize every single day, every business transaction. And if you're a person that does sales, you're going to be using the same sales account. You're going to be using the same thing. This is us looking at when we're dealing with a vendor at the same time as dealing with our customers. Okay? We give some discounts. Other people also, we give discounts. The vendor gives us discounts. We return stuff to the vendor as well as the customers return stuff to us. So this is a perfect example for you to practice understanding chapter 5 and chapter 6, okay? So this is a perfect example of a real life transaction, okay? So if you guys have any other extra questions for me, again, I just had a minor mix up right here. But when we fix it, it turns out to be perfectly evened out on both sides. Okay? All right. Thank you for sticking in there. It is 4:35 as promised. You guys are free to go.
Okay. Thank you very much.
Yes, no worries.